So, related to the idea, though, Joel, you touched on credit creation, right, in terms of how healthy of a credit creation environment that we are. And there's news
America,
out there, right?
America does not run on Duncan; it runs on credit. America runs on
That's,
credit.
that's exactly right. America reds on credit, and we're about to actually get more signals from the Fed that we're going to make it easier for America to run on credit. Because when everybody wants to focus on, Trump's tariffs and, basically government spending, many are not paying attention to the idea that the other part of what he wants to do is deregulation. And part of the deregulation mantra comes from, right, Michelle Bowman actually talking about her eventually stepping in, right, Joel, as the vice chair of bank regulation, I want to say, at the Fed.
Yeah, well, she's the head of bank regulation, is the vice chair of the bank supervisory group of the Fed, if I'm correct. All right, but either way, she's going to be the head bank regulator, and I think people should see this as a massive positive. I mean, for a lot of reasons. One, she checked a lot of boxes for the Trump administration. First off, meaning she's actually worked. This is interesting for a Fed governor who's actually worked in the financial area and seen what's happened in FEMA. She actually worked in the financial section, I mean, as a financial advisor in Homeland Security, right? And then when it comes to, again, for a Fed governor who's speaking at fintech conferences, speaking at blockchain conferences, I'm talking about the last 9 months, right? Let alone over time, and has been dubbed by others as one of the, what's the term? Regulators getting to yes, meaning responsible regulation. And she really has said that there's too stringent regulations on banks, and they should be pulled back and done right for the type of bank that you're looking at.
Well, and Joel, and also, I mean, and she's a lifer, right, in the banking industry.
Well, Bowman is fifth generation of community banks. And she understands that you can't apply the same regulations to Citigroup as you'd apply to a community bank, because if you do, the community bank just is done. And yet at the same time, to know what some particular farmer needs for credit and financing needs, to know what some particular industry in New Jersey or some particular real estate businesses or office real estate business in some other part of the country, can only be done by some of the smaller banks, right? It's a reason why there are 8,000 banks, banks including credit unions, 8,000 plus in the United States, because you really need to localize that. And I think she understands that at a really deep level. And that is wonderful for, I'll say, correct regulation. And in most cases, I'd see some deregulation that would allow banks and free up more credit for American businesses and people.
Right, because for everybody, for context, right, when we look at this, the banking industry has been in kind of a challenging situation for the past 3 or 4 years, because what happened was we had this wave of cash flow to the banks in 2020 and 2021 as everybody got basically money in their pockets. Nobody was spending money. Companies were flush with money that they weren't able to spend because everything was shut down for COVID. Banks got all this money and they put it to use buying either writing mortgages, buying treasuries, or whatever else at really, really low interest rates. And then when interest rates jacked up, all of a sudden they were in a situation where they couldn't make money anymore. And so we went for this environment where we went from, in 2022, right, 30 zombie banks. And for context, what zombie banks are banks that basically aren't working, right? They're not actually making loans. They're just kind of surviving off their existing loan book. But PNC, right, well-respected bank and research shop, put out in 2022 that they were seeing basically 30 zombie banks. Well, another research shop, FIC, in late 2024 came out and said they were estimating 265 zombie banks were out there. So when we actually look at it from Altimetry's perspective, we did our own research on our own zombie bank report, and we looked at all the banks that are greater than $50 million market cap, meaning, right, when you talk about 265, that includes a lot of those small banks that Joel was talking about, and in New Jersey or in a Sioux Falls, South Dakota. But we just basically said, let's look at the big banks, the banks that are big enough that they're investable. We found of the 300 or so, right now, 65 are what we'd call zombies. So that's 20% of banks, up from 12 in 2022. So Joel, that's a pretty steep jump that really calls for some changes in bank regulation, right?
It does, and then you have to say, is this a crisis in terms of, we're not talking about the 10 biggest banks in the U.S. We're not even talking about of the 300. Most of these, I'd say, Rob, are on the bottom half of the size of the bank, which means this isn't a banking crisis, these zombie banks. It's an unbelievable opportunity. It's an unbelievable opportunity.
Exactly. And so when you look at it, we've seen bank consolidation. When you just think about FDIC insured banks, so not the credit unions and everything else, which gets you that 8,000 that Joel said, that you said, we got to get about 4,000. And if you talk to anybody in a regulatory world, what they'll tell you is probably we need 1.5 to 2,000 banks, not 4 or 8. What's a good thing is, and this comes the idea of even though we've got these zombie banks that need to be digested, we've got banks that overall have, when we look at it from a uniform accounting basis, really, really healthy ROEs right now. So, right, we've got uniform return on equity, which is when we clean up all the data and we look at what real profitability is for banks. The average bank in the US right now, public bank, publicly listed bank, has about a 17% ROE. That's like 2 times what their required rate of return is, what they need to basically justify their existence. And that means we've got a lot of banks that can definitely absorb some of these zombie banks. And if Bowman gets in and starts to let consolidation happen, that's a really good thing, Joel, right, is the point that we're making here.
Yes, I think it leads to an opportunity because, I mean, some of these little banks, they're decent, but they're just overexposed. They're so small that when their client base is only one type of client, like office real estate, and office real estate's bad, they don't have anything to offset it, right? And yet there are good loans there, whatever else. It's just that these banks can't survive on their own. If we see some consolidation, the larger bank can, one, make sure that the smaller bank doesn't actually go under, or the FDIC doesn't have to take it over like they had to do with Silicon Valley Bank or whatever. They're small enough. And that's why I said this isn't a banking crisis. This is an opportunity because of these 20% of the 300 or so banks we looked at, the bigger 300 banks could easily absorb these 65 and actually make them viable again and make sure the depositors are still, those deposits are, Rob, you say unlocked is the term you use, the loan balances are still good. They can work with their client base. They can still grow their business in a way that those smaller banks just can't do on their own. So the consolidation that we expect to see does mean that the bigger banks that eat them up are going to get some bargain basement pricing of these zombies. And because of that, there's a bunch of banks that we actually have been looking at, from a stock market, stock picking standpoint, let alone what's happening in the industry, which we think is going to be very healthy. And the Michelle Bowman pick is very positive for all this.